All right, guys, we're back. I hope you are doing well. Bitcoin is breaking to new lows. It's put in its lowest close since February. Traditional markets are also putting in fresh lows across the board, including oil and gold, which are typically safe havens during times of uncertainty. But we're seeing a lot of these signals continue to play out. And this was the stuff that I looked at a month ago, explaining it at the time when the sentiment was extremely bullish. We had to get 80, we had to get 100 grand Bitcoin, but some of those cracks began to show. So I hope I can help with the signs early on in the piece, even though the market was way against me at that point. And essentially we did get a new low after most of the influencers were buying up too early. So that's what we're looking at in today's video. How much further could this drop, looking at those support levels and what's unfolded over the last 24 hours. Hit the like button. We are beating the algorithm. I'm very impressed. I can't believe it that you guys, I mean, hopefully it's a good thing, right? We've got basic thumbnails. We've got basic titles. You guys are smashing the like button. Let's go again. Let's continue to crush this algorithm and not have crazy warnings and crazy faces that the majority do out there. Okay. Let's kick it off with the traditional markets, and I'll get into Bitcoin and, as I promised yesterday, some of the altcoins. So I'm going to get through this reasonably quick. If there's stuff that you haven't been following on, obviously hit the subscribe button, and I'll continue to update you throughout the videos day to day. The smart money equals the dumb money now. After nearly 6 months, investor optimism has evaporated. All it took was a few days of selling and the cessation of some long streaks of momentum. So essentially, we had a big divergence between dumb money and smart money. This is looking at the S&P 500, of course, and now we're basically back to net even. So I'm not saying that this is the end of the decline, but we've now met some sort of equilibrium between smart money and dumb money. Last fall, stocks held up magnificently well, even after sentiment initially reached extreme optimism. So we've seen that extreme optimism. That's a hallmark of a developing bull market, and prove to be so once again. So what we're potentially seeing is a further development of the bull market. As I said, potentially seeing, and yes, you do have to get corrections in a bull market before they continue on. Now that we've had the first real taste of a real selling pressure since November, investors have quickly become fearful, or at least a heck of a lot less optimistic. I think we're definitely seeing that now with this correction on the S&P 500, now down 5.37%. Now we saw larger corrections through the correction of Q3 of 2023. And so I guess as it stands now, this is just something that might take longer to reach new fresh highs again compared to where we've gone. But this so far still looks relatively healthy. Where it gets unhealthy is a breakdown past 4,700 points for the E-mini futures, back below the previous all-time high of 48 and below the swing bottom out of the all-time high, where it came in at 47.02. So that's going to be a key level below on a longer term picture. That would then shift the sentiment quite bearish, and you would see a long time underneath these all-time highs, which could develop into that major crash or recession. The Dow Jones has broken a couple of swing bottoms here on the weekly chart, and it is down 6.24%. So it's the largest correction since October. The corrections are still on. This is still looking healthy. As I've pointed out, unhealthy or weak would be underneath 36,000 points here for the Dow Jones. So on top of that, we've seen oil come down, and that was the Friday bar. It was basically a pretty significant signal bar there, huge move to the upside with a fresh high and then a very low close. So you guys who follow your candles would see that as a very significant reversal signal candle, especially after a significantly long run to those prices there. We had a conflict in the Middle East. Typically oil does well. It's not doing well at this point in time, but it's come after such a long run. So we'll continue to follow up and see how this develops, but I wouldn't be getting too concerned here for the overall macro geopolitical landscape while we're still seeing it in relative strength at these higher prices. And for gold, nothing has really changed here either. We got the reversal candlestick on Friday. Everyone was piling into it. Right now, still getting some relatively high closes, but overall, it's just grinding out here above the previous old all-time high. Some look at gold and oil as the starts of further collapse and crashes and recession, all that sort of stuff. Right now, nothing is really saying that. Nothing's screaming that things are going to get ugly, because we've still got healthy corrections here for the S&P 500s. And yes, they take time to develop, but I wouldn't be trying to call it this early in the piece when we don't even have any sort of breakdown on the S&P 500. The 18.6 year cycle is still well and truly in this winner's curse phase. That's what we got here. This is this move up into 2025, 2026. The point here is we could see several months sideways, testing lows, coming back up, testing some higher prices, getting exciting, chopping the investors up in that period while we continue to play out in this winner's curse phase. That's for BTC. This is the 18.6 year cycle, over 200 years of history. You guys have heard me say that before, but if you are new, which we are getting a few hundred new people every day, so hit that like button. This has been over 200 years, and in the UK, it's been over 300 years of data of this cycle continuing to play out. Why more people don't see it? I think they want to make things more complicated than they are. And most people look at the stock market only or look at commodities only. They don't necessarily put the real estate cycle as the foundation of how the cycles work. More on that in future videos, but for now, this is where we are at. We're in this winner's curse phase, so I still see further upside for cryptocurrencies and Bitcoin coming. Now, this is what we were looking at back in March. So a month ago now, there was the signal that came in on the 17th of March, 3DD. We had 3 days down. Yes, that is a green bar, but you have lower highs, lower lows. The most important thing there, that indicates that selling pressure was coming into the market. This signal has been phenomenal throughout the history of Bitcoin, throughout the history of many markets, if you care to do the research yourself. I'm not going to spend hours here going through it. The idea is that the 3-day signal will show that you probably got, on probability basis here, there's a longer time underneath the old top than most are expecting. So most go to buy the low, and they say the low's in. Influencers are saying it's in at 60K, buy this low. Market started to run up after that point. And we got dead cat bounces. One dead cat bounce here. It's sold off again on higher volume. It came back. We got into the gotcha bar. You guys might remember the 72,500, and then it closed low. Again, look at the swing chart. It came back underneath those tops at 71 and then failed to the downside. So it came to test the underside, and the support and resistance flip played out. Heavier volume coming back in. Again, test at 67, as we pointed out with the 50% level. So this is all part of GAN analysis. And if you want to learn more about this, check out the link in the video description, top link there, TIA Premium, going through courses on how to understand this for your short-term and long-term trading. It's been the best thing that I've learned for my own trading and investing over the last 14 plus years. So looking at where we currently sit, lowest close since February 29th, and the price did break down from those lows marginally, so I'll take that as a win. This is the video back on March 20th here, after these moves occurred, and this was the point where a lot of people were buying this low. It might not be far off the low. The point I was making is, after you see a signal of 3 days down, it's unlikely, not impossible, but it's unlikely that we were going to see much higher prices anytime soon, and that we could see at least a grind for a long time or further downside. So far, we've seen a grind for longer than what's happened, and we're seeing some downside. So the main thing here is not to get overconfident on those dips when you start to see a lot of the momentum at least coming to an end for the short term or medium term, depending on what time frame you're looking at. So that's the 3 days down. I'm going to go through that in time frames now, where we could be several months, just looking at the probabilities, not saying that it has to happen. I don't have a crystal ball. I'm just working on probabilities, sharing those with you guys, and then hopefully using it for your own research, your own analysis, and then taking action on it, as opposed to influencers saying buy this dip and buy this dip and buy this dip and all that sort of stuff. So the low wasn't in. That's now been proven. A lot of my points take a bit of time to play out, and I'm looking at longer term stuff here. So that's why we're looking at lows coming in for the market back in 2022, 2023, very heavy on the low here, on the banking crisis low, with how bearish the world was, yet it was a higher low in price. That has now played out. So that's how we come to these decisions in the market. So that's a look at those two. Lowest close there, rejections time after time. Now, this one here, the automatic reaction with Wyckoff here. So automatic reaction. It's been a while since we've looked at the Wyckoff schematic in terms of the reaccumulation, accumulation, or distribution and redistribution. At the moment, it seems like it's a distribution taking place yet again. The last one that I covered was back here, which was a distribution on the 4-hour chart, and then it was reaccumulation on the daily chart. So we saw that distribution back here came through, it confirmed taking out the lows, and then basically powered on to this last point here. The last time we used it was back at the bottom for a macro accumulation. Nailed that while the majority was still looking at this being a redistribution to the downside. Nonetheless, here we are. We find ourselves to the current day and the automatic reaction taking place with intense buying substantially diminished after the buying climax and heavy supply continuing. An automatic reaction takes place. The low of this sell-off helps define the lower boundary of the distribution trading range. So where's my chart here? There is the AR. We are almost back to that price there. Reasonable close at the moment, so I wouldn't be surprised if we were to see some sort of reaction from here to the upside to potentially test some of the higher prices. And what would they be? Well, let's take our 50% back down to 66.2, and of course those previous tops there at around $64,500. That's if you're to get a signal for the price to come back up and test those levels. Again, the same thing as yesterday. 67 is going to be that key level there for the market to get above, consolidate, and then break out of in the short term. So in terms of the longer term and the bottom not being in, potentially taking months from this point, I will point out that the low could be relatively soon, maybe forming now or in the next month or so, but the grind could be those several months. So all I'm looking at here is the 3 days down, and then where does that bottom come in and how long does it take to get back to a new high price? That's the gist of this. Now, this tool, if you want to look for it, is the Gann Swing Indicator. There is a link to it in the top of the video description for a 7-day free trial. Now, just quickly on this, we are looking for what's happened in the past where these 3-day down signals occur. This one tends to be my most preferred at this stage. You can see 3 days down, you want to see the red triangles not being interrupted by any green or any blue signals above. Gray is okay, but you don't want to see it interrupted by green or blue. So we've had those days down here. This was April 2021, similar sort of event. Everyone's getting super excited into this next peak in May, calling for 80 grand Bitcoin. That was your influencers on, out there. Anyway, market collapsed from that point. Now, the time frame I'm looking at here is the 97 days from the top to get to that higher low in July. Then the market started to move away. So 97 days, call it about 3 months to the actual physical low of the price. That was 69 days from the top, and then 35 days to get to that significant dump. So the top to the dump was 35 days, 69 and 90-ish days. But to get to a new fresh high price from that top, remember a lot of people are buying in at the tops. That's what causes these tops. And so for them to get back in a profit, they're waiting about 6 or so months. There it is, 189 days to get back to those prices of March, April, and May of 2021. That happened in October. And then, of course, November was the top, and the market came down from that point. We had 3 days down again in 2019. That took a long time. That was 5 months. Remember, there was a 50% decline, another 50% decline, the halving, which took about 3 months of consolidation, and then the market took off from there. So we looked at the halving in yesterday's video. I'll leave a link to that at the end of this video, just in terms of corrections around the halving. I'm going through this relatively quickly because we've looked at it before. Make sure you hit the subscribe and like, because we are miraculously beating the YouTube algorithm. So much appreciated to you guys. The signal prior to this, 2016, 3 days down, you can see it right there. The halving occurred around that signal again, and then it was about 6 months, almost dead on 6 months, until it got back to the same price of the high before the signal, directly before the signal, okay? The signal has to be just after that high, 1 or 2 days after the high, that's it, okay? Halving occurred, market came down, I think this was like a 40% drop, and then of course, there you go, 6 months. 3 day down signal again, 200 days, 6.5 months, 40% correction, and a couple more here, going back to 2012, Just looking at the halving, actually, that was from yesterday. Actually, there is no 3-day down signal here. I just want to point this one out because of the halving. That was about 2 months top to the halving, then to a breakout, and then that was also 5 months from the previous top out. 3 days down here, that took a long time to get back to fresh highs, several months in that case. And that's it in terms of the signals there for the 3 days down for this longer stretch to a new fresh high. So let's have a look at some time frames here. Should this play out again? There's the top at 35 days from today. And if we look at April 2021, it was about 37 days, I think, to get to that first major low. If you'd bought that major low, you had to sustain about 2 months around those same prices. Okay, there's the first major low in May, and it basically bounced, came back down, bounced, came back down, and it just was a grinding effect for about 2 months. That's the sort of timeframes I'm looking at here. Should we get this breakdown of 59, and then we come back into the low to mid $50,000 range, maybe it bounces back, tests high 50s, gets rejected again and comes back down, and we take a few more months just to come back out of that zone. So that's why I've got something around, months. If Bitcoin breaks down from here, it could be months. Just looking at the charts and the stuff that we have already covered many, many times before. I looked at this in a video, 18th of March. The top signals, there's all these signals that people were, they just sort of ignored them around that top because of how excited the market was. 3-day down signal, media time frame, medium in months, 4 to 6 months, okay, from that top to break to new highs. The shortest time frames we looked at were around 8 to 13 days. That's obviously off the cards, and so is 30 to 40 days. The signal does not suggest a deeper correction than the current norm. It could, but it didn't mean it had to be, and this was at the time when everyone was still extremely bullish and really hating on the analysis itself. But if we just take a look at those percentages, down to where we currently are, it is 19%, and to that previous low was 17.5%. Having a look down to those lows, we just covered 17.5 and 19. But if we take it down to the 50% level, that is 24%. We've seen 20 to 22s already, and then if we take it back to this reaccumulation zone before the breakout, well, then you're sitting at about 30% correction. So nothing is really off the cards should this market break down from 59K. It just seems like it might take a bit longer to break back to new highs, which isn't the worst thing in the world, especially if you're looking to get into bigger altcoin positions during this correction. And I said I would look at Solana and a couple of others, but today we're just going to look at Solana, down 43%. The previous moves down were 46 and 53, call it 53%, which if we were to measure from where we are now for Solana, 48% takes it to the 50% level, and you wouldn't want to see it break down from $80. A breakdown of $80, Solana may still go up, but it's not going to be strong. It's not going to be stronger moves than other cryptocurrencies. That is your key level to watch there for Solana. I don't know if it's going to get to $80, but if it did, it would be a weaker crypto just based on the chart here. That's a 62% correction. So in this climb, Solana's only done losses of 53, 46, and call it 38%. Currently sitting at 43, so it's well within that range now. Having a look down to roughly, what has it done? 53%. Well, anywhere between sort of 95 and its current price would be a reasonable DCA area. Just know if you were to buy now and it dropped to the lowest point possible of that 53% correction, well, that's still 25% loss from where it currently is. Okay, a crypto can lose 50% and then lose another 50% and still not be zero. Okay, that's just simple maths. I know it confuses some people, but that can happen, and it happens quite often. Okay, so that's what I'm looking at there for Solana. I'll cover a few more in future videos. That was Bitcoin, a look at this 3-day down signal, especially as we've just hit new lows here for this correction, and a time frame on just how long this might take to break to new fresh highs, which isn't such a bad thing, I think, for accumulation for this final leg of the move of cryptocurrencies. Again, that could be late 24, maybe into 2025. I've still got that option open, and I'll cover it in future videos. Thanks again. See you guys at the next video. Take care and peace out.